Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Thanks for tuning in to Modern Investing Techniques, episode 78. I'm Patrick in Vancouver. Today is June 16th, 2026. Time to break down today's market setup and find our edge. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Canadian investors with energy exposure should watch oil price moderation closely as the U.S Iran deal heads toward formal signing, with the Strait of Hormuz reopening timelines still uncertain. Market index data is currently unavailable from the feed. Global shares mostly advanced, while Japan's Nikkei 225 briefly topped 70,000 before the Bank of Japan raised its key rate to 1%. Focus is shifting to the Fed amid the U.S. Iran peace deal, with oil traders uncertain how quickly supply routes will normalize. About 14 days ago, we picked HIMS, and the lesson is that acquisition catalysts need volume confirmation to withstand sector rotations. That sets up an interesting environment for income strategies that do not rely on big directional moves. A covered call ETF strategy lets investors collect premium income on holdings they already own by selling out-of-the-money calls each month. Today's subdued Wall Street futures and focus on the Fed make income generation more attractive than pure directional bets, especially when volatility compresses. Investors can implement this on platforms like Questrade or Interactive Brokers by selecting a broad equity ETF such as QQQ or XIU. Then sell monthly calls at the 30 Delta strike. The premium is collected regardless of modest upside. This approach has historically performed best in range-bound or mildly bullish markets where the underlying drifts sideways. It can deliver 8 to 12% annualized yield on top of any capital appreciation. The main risk is opportunity cost if the underlying rallies sharply above the strike, capping gains. Always size the position so the covered calls represent no more than 20 to 30% of total equity exposure to preserve upside participation. That income tactic works best when your overall allocation avoids overconcentration in any single market. Imagine you allocated 40% of your TFSA to Canadian equities last year when the TSX lagged global markets by 12 percentage points. Your order filled cleanly, but the real cost showed up in missed compounding from U.S. tech and healthcare names that drove the NASDAQ higher. The mechanism is simple. Canada represents roughly 3% of global market capitalization, yet many DIY investors hold 30 to 50% in domestic stocks because of the dividend tax credit and familiarity. What most retail investors do not realize is that their job, home, and pension already embed a massive Canada exposure. So the portfolio ends up triple exposed to financials and energy, which together make up half the TSX. The professionals always check geographic revenue breakdown before adding another Canadian name. The biggest mistake with home bias is assuming familiarity reduces risk. Instead, always measure your true economic exposure across borders and cap Canadian equities at 15 to 25%, unless you have a specific tactical reason. That kind of geographic discipline pairs naturally with disciplined position sizing on individual names. This is a midweek update on our current practice investment. The pick is MRVL, Marvell Technology, on the NASDAQ. The strategy is a catalyst entry on strong fundamentals and share price momentum. The catalyst comes from strong fundamentals driving share price gains as reported in today's coverage. Price action shows continued upward momentum. Monitor the 20-day and 50-day moving averages for continuation signals, with volume compared against recent averages. The stop loss is set 6 to 8% below entry to limit drawdown if momentum fades. Broader market rotation remains a risk. The target is plus 3% to plus 6% over the weekly hold window. Confidence level is medium because positive fundamental momentum is clear but lacks the volume spike confirmation required by current rules. This setup demonstrates how to evaluate a momentum continuation trade in tech after an initial catalyst. It forces discipline around both fundamental drivers and volume thresholds. Listeners learn to size positions conservatively when sector rotation risk is elevated. This is a simulated trade for educational purposes only. Yesterday, we closed the LLY position. We simulated buying at $1,159 on Monday's open and exited at $1,160.95 on Friday's close. The result was a gain of 0.17%, or $1.68 on a $1,000 position. The modest gain came despite limited follow-through once broader rotation pressures appeared. That outcome reinforces the need for stronger confirmation signals. The rule is to require both a fundamental catalyst and a volume spike above the 20-day average before committing capital to healthcare launches. Benzinga Pro lets users filter for high short interest names, monthly dividend ETFs, or AI stocks under $10 with real-time alerts and customizable scans. The edge comes from spotting unusual options activity or short interest spikes before they appear on free platforms. Canadian TFSA users running weekly holds should use the short interest and volume filters to avoid low liquidity names that violate the volume confirmation rule. Access comes via Benzinga's paid Pro tier, starting at the monthly plan. The TWS API from Interactive Brokers allows automated monitoring of moving average crossovers and volume thresholds directly from your brokerage account. It gives retail investors the same systematic entry discipline institutions use. Set up a simple Python script to alert when a watch list name prints above average volume alongside a catalyst. No coding experience is needed with their sample templates. It is free with any Interactive Brokers account. Parsons has secured oversight contracts for the $1.1 billion Minnesota Bridge project, according to today's coverage on investing.com. The infrastructure initiative centers on bridge work and adds measurable backlog to the company's existing project pipeline. Parsons already showed contract momentum prior to this award, making the new win a continuation of recent business development. The $1.1 billion scale provides visible revenue visibility for the industrial contractor over the coming periods. Investors following the industrial sector can place PSN on their watch list ahead of any further developments. Entry consideration should focus on any price action that pulls back below the 50-day moving average. The source details appear in the investing.com company newsfeed for immediate reference. Interdigital secured an injunction against Disney through a European court ruling, reported on investing.com. The legal outcome directly supports the firm's ongoing royalty collection efforts in the intellectual property space. Disney faces restrictions tied to the injunction, which may influence licensing negotiations going forward. The victory strengthens InterDigital's position as an intellectual property holder with enforceable European rights. Market participants tracking IDCC can monitor the name for any retest of recent support levels. A starter position would be evaluated only after that support retest occurs in subsequent sessions. The full details are sourced from the investing.com company news section dated today. Clean Energy Fuels obtained new power contracts in Puerto Rico as noted in today's investing.com coverage. The agreements expand the company's operational reach into additional renewable natural gas markets. Puerto Rico represents a fresh geographic area beyond the firm's prior project locations. The contracts focus on renewable natural gas supply and align with broader utility sector demand trends. Utilities-focused investors can add CLNE to their watch list for potential future monitoring. Any position consideration requires confirmation that volume exceeds the 20-day average before proceeding. The contract announcement originates from the investing.com company newsfeed. Hyperscale data disclosed Bitcoin holdings totaling 713.5884 coins in a recent filing covered by investing.com. The reported coin balance offers equity market participants a listed proxy for Bitcoin price exposure. Investors gain indirect crypto participation through share ownership rather than direct wallet management. The exact holding figure of 713.5884 coins provides a concrete data point for position sizing analysis. Market watchers should avoid initiating any addition until Bitcoin itself holds above its 200-day moving average. Stabilization above that long-term average serves as the explicit threshold cited in today's report. All figures trace back to the investing.com company news item published today. The simulated portfolio now stands at 34 total trades. The win rate is 59%, with 20 wins, 11 losses, and 3 break-even results. Cumulative profit and loss reaches $396.68. Cumulative alpha versus the NASDAQ sits at plus 21.2% across 27 benchmarked trades. Average return per trade is plus 1.17%. The best trade delivered plus 20.11%, while the worst came in at minus 11.35%. Our AI analysis is learning from patterns around volume confirmation and adjusting entry criteria accordingly. Before we wrap, check any tech name's 20-day volume versus today's print before considering entry. Tomorrow I will walk through how to set the exact volume threshold alert inside the TWS API for your own watch list. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts covering tech, science, markets, and more. If you enjoyed today's episode, give SpaceX Daily a listen, the daily companion for following SpaceX as a public company, from Starship to the stock ticker. You can explore the whole lineup at naranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?